Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LYGEND Resource Interim Report. LYGEND Resources and Technology Co., Limited, offers a diverse range of businesses and services, including nickel product production, smelting and trading, manufacturing and exporting machinery and equipment for core smelting, technical support and consulting, trading in laterite nickel ore, send, and ferronickel, new energy, technological development, logistics and shipping services, project management, industrial real estate, business services, business management services. The stock price of LYGEND Resources has skyrocketed by 242.1% in the past year due to a combination of strong financial performance and strategic positioning within the booming new energy vehicle, NEV, and stainless steel industries. The company's exceptional financial results, including a 131.7% rise in overall profit and a 95.9% increase in gross profit, have been driven by its robust growth in revenue. LYGEND Resources' inclusion in the Fortune China 500 list further underscores its strong financial health and operational resilience. Additionally, the company's strategic market position as a key player in the nickel industry chain has allowed it to capitalize on increasing global demand for battery-grade nickel and cobalt. Its consistent growth and reinvestment strategy have also contributed to its impressive stock performance. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue grew significantly due to various factors, including the sourcing and trading of laterite nickel ore, trading of ferronickel, long-term supply agreements with upstream nickel mining companies, global market presence, and year-on-year growth in total operating revenue. Additionally, improvements in production efficiency through process optimization, increased production capacity, and environmental benefits also contributed to revenue growth. Revenue decline drivers. On the other hand, revenue decline was driven by factors such as downward volatility trend in nickel prices, increase in visible inventory of nickel on futures exchanges, fluctuations in raw material prices, international trade risks, and changes in exchange rates. These external factors put pressure on the company's revenue, leading to a decline. Overall, the company's revenue growth was driven by internal factors such as process optimization and production efficiency improvements, while revenue decline was driven by external factors such as market volatility and exchange rate fluctuations. Net income and profit margins overview. The company's net income experienced significant growth, increasing by 143% on page 11, 131.7% on page 21, and 95.9% on page 20. This increase was primarily driven by the rise in output of hydrometallurgy and pyrometallurgy products, as well as lower production costs. Profit margins also saw improvements, with implied increases due to optimization of product portfolios, cost control management, and technological advancements on page 11. On page 15, technological innovations and optimized processes contributed to improved profit margins. However, not all segments showed positive trends. The trading business gross profit margin decreased from 4.5% to 4.3%, while the production business saw a slight decline in its gross profit margin from 34.5% to 33.1%. Other businesses experienced a significant drop in their gross profit margin from 12.3% to 6.1%. Despite these fluctuations, the company's overall net income and profit margins demonstrated substantial growth, indicating a positive financial performance. The company's financial performance indicates a positive trend. The operating cash flow has been consistently generating a surplus, with a notable amount of $2,988,564 recorded in the latest period. This is further supported by an increase in net change in cash and cash equivalents of $1,323,053. These figures suggest that the company is successfully managing its finances and generating sufficient cash to meet its operational needs. The company's debt level has experienced a notable increase in recent years. As of June 2025, the total debt stood at RMB 16,387.7 million, up significantly from RMB 13,852.3 million as of December 2024. This growth is also reflected in the increase in interest-bearing bank and other borrowings, which rose to RMB 10,719,407 from RMB 7,882,268. Furthermore, total current liabilities increased to RMB 17,888,000 897,983 from RMB 13,798,359. These changes indicate a substantial rise in the company's debt level and associated interest expenses. The financial performance of the company varied across different regions in 2025. The Chinese mainland segment stood out as a top performer, with revenue increasing by 74% from $9.35 million in 2024 to $16.33 million in 2025. This significant growth was accompanied by stable non-current assets. In contrast, other regions, including Indonesia, struggled to match the Chinese mainland's performance. While their revenue did increase, it was at a slower rate compared to the Chinese mainland. However, these regions saw a substantial surge in non-current assets, indicating rapid growth and potential for future expansion. Management is emphasizing a forward-thinking approach, prioritizing sustainable development and technological innovation to drive growth. The company aims to solidify its position in the global nickel industry through green and low-carbon practices, while continuously improving through research and development. Strategic partnerships with top institutions and mainstream enterprises will also be key in expanding its presence in emerging markets such as the NEV industry. The company has a history of paying dividends to its shareholders. In fact, a final dividend for the year ended 31 December 2024 was paid out in full on 17 June 2025, amounting to RMB 0.35 per share. This demonstrates the company's commitment to returning value to its investors through regular dividend payments. Concerns about inventory buildup and supply chain disruption exist. There are valid concerns regarding inventory buildup and supply chain disruption within the industry. Elevated inventory levels have been observed, indicating potential issues with demand management or production planning. Furthermore, trade uncertainties, shifts in supply-demand relationships, and geopolitical tensions are contributing to supply chain disruptions, exacerbated by exchange rate fluctuations. These factors collectively pose significant risks to the industry's operational efficiency and profitability. That concludes the financial summary for LYGEND Resource. Feel free to comment below, and I will be happy to answer them when possible.